Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that. Hey guys, I knew I just couldn't go through the full weekend without doing a quick video. I missed the last few days because honestly, the market has been insane. And I had to spend a lot of time with the pros, making some adjustments to my positions. It was pretty wild there for a while. So I just kind of wanted to make sure I did all of that, but I didn't want to leave everybody hanging. So here's a quick video. I'm just going to kind of explain the things that are going on. There's a lot of changes in this market. I knew we were too hot as we kind of kept going with no break. Well, we finally got a break. And I was looking for a slightly higher low or a lower high, and I thought at this candle we'd get there, and especially at this day. But once we kind of got in this line, I was starting to think, things are changing. And before we could get our next low and hopefully hit off the 50, we just had this massive day. $2,000 day straight up, broke through the 20, broke through our double top here, and fully closed up here. And because of this move here, the market was like, there were some changes in the market. This move did one thing, and that was reconstitute our bearish divergence. So this high made for a lower RSI, even though we have higher highs. So we still have bearish divergence, but so with that, I was thinking that we are looking like we kind of have one final stand, and it is this death cross. This death cross is going to resolve in 1 day and 3 hours. And so 1 day and 3 hours from now, this death cross is in. We were expecting to pull into the death cross and then reject. Yesterday, with this crazy move, there was no time to adjust positions or do anything. And so I held on really tight and didn't make any changes all the way through this top wick. Then we turned around and dropped. Now at the end of this day, this is on the 16th, at the end of this day, it looked very, very, very likely that the bears had rejected off of this death cross. And if we had gone sideways, if we had practically gone up to the 50% mark on this, there would have been probably another meltdown, and there was a chance for at least some kind of exits for bears. But yesterday, this kind of sealed the deal, because this price action only dropped less than 50% of this candle, and it was a slip between this double top here, but it was close enough, and especially with this bullish engulfing that followed right after, it's close enough that chart technicians would look at this as a support. So this market, the bulls are in control. On a weekly chart, this death cross should be resistance. It should be. But the problem with the bear thesis is that this falling wedge has broken out and confirmed. I thought we'd get a couple of weeks to confirm a little bit lower down here to pull closer to these averages. But look at the shape of this. It is undeniable, unmistakable that we have support on the top of our breakout. This is absolutely classic. This is bullish beyond belief. This is so bullish. And if we had gone up and touched this death cross, we would have had a pretty solid rejection. But we didn't. We pulled towards it, came back, and found support at a very, very strong place. The support here on the top of this important breakout, confirming support on the top of this is so powerful that this move alone will probably get us through this death cross. That's my speculation. I think the case for the bears is getting very thin. So yesterday I took a huge position in Ethereum, and I'll kind of explain Ethereum's chart, but I did do that to counteract my Bitcoin short, and I'm going to unwind my Bitcoin short as best I can. So anyway, this market is now, I mean, there's very little left for bears to point to in the structure of this chart. We have a support here, very clean. We have flipped from resistance right here to support right here. It's unmistakable. We also have this falling wedge is so clean. Come down, hit it as support, turned around, bullish engulfing, giving us a strong move right into this death cross. What's going to happen in my mind, this is what I think will happen now. You have to take the new data as it comes. We will probably pull right into the 200 at close, because the 200 is so important that there's a chance, well, it'll be very intense at this 200. If you're going to cross an important resistance, you will most likely close on it and start a new candle above it. That's usually how you do it. And in this case, we have such bullish structure that we will likely probably pull right up to it. And this is 25,000. I'm thinking tomorrow at 5 o'clock Mountain Time, 7 o'clock Eastern, we will be probably closing right on 25,000. And in fact, it's going to get really wild right up there, because there's a tug of war. There's a lot of high volumes and things going on. If we close on that, we could get a little bit of a fake out to the downside, but I'm betting we're just going to explode for the next week. This is a huge breakout point. What I was telling the pros is that when we hit an important resistance like this is such a massive pivot point that it's going to go hard one way or the other. It's either going to be a rejection, and it'll be like a couple months rejection, or it's going to be a couple months. It's going to be huge either way. But there's very little resistance to the upside, and there's only one point of resistance. So there's very little resistance to the upside. It's just the death cross. That's the only resistance we have, because we've already hit this. And if we close on the at 25,000, we will close higher than these resistances. And so we're there. Candle body right here. This candle body was 24.3. This wick was 24.260. It essentially mirrors the top of these candles. So this was our respect to this rejection here. This was a rejection matching here. This could have materialized to the downside, but it just didn't. And because of that, bulls are in control. So, I mean, you just have to. You can't. I mean, I have an ugly position. It's not pretty, but I have to be objective. When a chart looks like this, you have to be bullish. You just have to, because we rejected exactly perfect. There were many ways where this could fall apart, especially on the daily. Had we done anything but do a bullish engulfing right here, if we'd have closed down here in the middle somewhere, if we'd have respected the resistance at this line here, because if we'd have come up and found resistance at this double top, this could have totally fallen apart. And it wouldn't have fallen about too far. I mean, the 50 is coming up. We have the 200 down here, which would be, the downside is not strong. So that's what I'm saying about that. We have a, it's not a binary trade. The upside has very little resistance. We've already done a ton to create support. It has a lot less effort to go up right now. The downside, so we could reject, but we've got support here. We've got support on the 20. We've got support on all of these wicks here. We'd have to get all the way down to here before we started thinking, oh, things are getting a little bearish. By the time we get there, we'll have support on the 50. And then the farthest we could get is probably the 200. I doubt we'll lose the 200. Now that we're above it, we're not going to lose the 200. 20,000 is in the past. That is in the rearview mirror. So it could have played out differently 1,000 ways. If this had pulled out, we'd have put in a lower high. We would have pulled back. It would have just been, pretty good. We could have broken down here. We rejected perfectly off this death cross. We could have easily retreated there, but we didn't. And now we're 1 day away from closing literally on the death cross. That is so bullish. Like, it's unbelievable. And even on a daily, we were waiting for a pullback of some kind, right? This was way too hot. Things were crazy. Things were really heating up. They were moving really fast. And we needed some kind of a pullback. Well, we got one. We got a pullback. In fact, this pullback had wicks that intersected with these wicks. The chart structure is perfectly intact. There's nothing bearish about this. If we could have done it a couple of different ways, but it just didn't work out like that. And now you just have to be you just have to be bullish because the chart's bullish. You really can't mistake that. Will it all happen at once? I don't know, but I do know that this 25,000 level is so insanely pivotal. It's monumental. Breaking above this, the bulls will pour in. They will pour in. If we break below, it's temporary. It's short term. So all of my positions are anticipating we're anticipating a breakout to the upside. So I'm slowly averaging out of my Bitcoin short, just taking it in the face because I have to. You know what I mean? You just, when the writing is here, you just do. So I'm going to wait for the, I'm waiting for the weekly close because once we get up here, it's kind of, there's no question. If we reject even temporarily, I'm looking for exits like crazy. So anyway, I figured I should catch you guys up. This market has changed. There are a million ways this could have broken apart. This could have fallen back down. That would have been bearish. This could have continued, had a little jag here. It could have been bearish. There was so many bearish opportunities, and the bulls ate every single one of them up, and they're still in control. And if they get above these major lines, it's really blue sky. And where's the blue sky? The 100 week moving average is the target. It'll be coming down slowly as we go. By the time it comes down, it'll probably be around 32,000, and it'll be right near this trading range here. This will be a place where we will likely take a small break. And if we really wanted the best structure, we would come back and find the 50 or something, Will we come back and hit 25? That's also possible. But yeah, even if we mess around, head up for a bit, get people really excited, we could come back and find it as support. It'd be perfectly bullish. There's a lot of ways that this can work out. But we moved so quickly from 25,000 to practically 30 that we're going to probably recoup that really fast. So 25 to 30 is going to be a walk in the park. All right, so I did take a big long on Ethereum. And the reason why, Ethereum structure is even better. I just couldn't help myself. So we do have a top here, and we've come up and whittled away on it. There is if there's any resistance at this level, we have eaten the crap out of it right through here. There is very little resistance left, and it was essentially going sideways. We're still slightly ticking up, but it was Bitcoin that was kind of showing more bearish signs than Ethereum. But Ethereum didn't pull back very far earlier on. The FTX thing was fairly mild compared to Bitcoin. We are above our 200 week moving average. We have a golden cross already done. We have our 50 rising, and look, we already touched the 50 as support. That is so bullish. If we touch it with a beautiful hammer, or excuse me, dragonfly doji kind of candle, something with a really long tail, we went down just to acknowledge its existence, and we're off. And the response obviously kind of followed Bitcoin, but we came right up back to our resistance, touched the 50 for rejection, and now we're kind of ranging. But we're going to get squeezed on Ethereum. We're going to get squeezed between the 20, the 50, and this 50-week moving average. When these start converging, we're going to get nice and hot inside of here, and then we're going to be breaking out. So there's a lot of things here. Ethereum has really good structure, and the fact that we didn't get too overheated, we had a perfect rejection off the 100 here. We broke through it here, and then we're in the vicinity, showing respect to it. And now we've got our 50 on top. When our 100 gets above the 200, we're in the green zone. And green zone is bull territory. We just go crazy in the green zone. The green zone doesn't stop until we lose the 50. And we've already touched it. If we touch it here and there as we go, man, it's going to be really pretty. But same thing with Ethereum. The target is the 100 week. That is 24. By the time we get to it, it'll be 24, maybe 2,300, something like that. And that's a decent move from here. Decent move. So that is what we are waiting for. We do have the 20,000 mark, or 2,000 mark. This is going to be kind of a big one, I would expect. It's a round number. So there's some work that we'll be going through. But lately, Bitcoin's been taking the stage. Even though this chart looks better from a technical standpoint, it looks better. But but Bitcoin's getting all of the love, because look at Bitcoin dominance. It's just shooting up. Bitcoin is leading the charge right now, and most double tops never end up as double tops. Most of the time, there's a break. So, if Bitcoin gets really hot, it could add 3 or 4% to its thing, so it could run faster for a little while. Once Bitcoin starts to flatten off or stop pushing so impulsively, the rest of the market will come with it. That includes Ethereum, and it includes all the alts. There's a lot that could happen here. I don't think Bitcoin dominance will get up as high as we used to be, 50 and 60%. There's just a lot of altcoins now. And there's a lot of believers in the altcoins. Those communities are big. But this is heating up. So we have Bitcoin dominance going high. But having a long-term position in Ethereum is just pretty smart right now. So both of these charts are officially just about as bullish as you can get. When the new week starts, we'll see. There is a battle here. So it's not a guarantee. So in my mind, I'm thinking 66% that we're going up through this. But that still means that there's a giant percent chance that we reject, and it could take us a while. But if so, that's okay too. We're just in a position to take it either way. That's why I was excited to kind of offset my risk with an Ethereum position, so that I can slowly unwind Bitcoin as Ethereum takes off. And if we pull back, I can just kind of decrease my losses on my Bitcoin position and my Litecoin's in great shape. So just kind of how I'm kind of navigating that. But this market is wild. This is fast moving. So you just really have to kind of plan in advance, because you don't want to make emotional decisions. You don't want to be making decisions in the heat of the moment. You want to make sure that you've got targets and preparation and thoughts, because if you're trading and you're emotional, you're going to make mistakes. So, but yeah, there's a quick update. I figured I'd give you something there, and hopefully life will be back to normal on Monday. We'll see though, because Monday could be explosive when institutions start trading in the morning on Monday. We'll see. I don't think it'll be very quiet for a while, just because this is such a huge point. This is going to be a monumental pivot point. It's gonna come back. Either we reject or we fly through this, and it's gonna be months. That whatever our reaction to this point is, it'll play out for months for sure. All right, guys. Thanks for listening, and we'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.